All right, ladies and gentlemen, I got your watch list coming in October 30th, 2019, and the stock market is going to go crazy. It is history in the making. Well, potentially, but the move is kind of already predicted pricing in. However, it's kind of one of those win-win, lose-lose situations, both for the Fed and then the potential plays, or even where the market, depending on whatever comes out, they just might not like it. But you mix that with a dash of earnings, we have a very, very interesting situation. And what I mean by interesting, in this case, we even saw it today. We even had some negative trade news come out. Literally, I don't know if it was actual news or even a warning. It was saying a deal might not get signed by November at the Chile meeting, and the markets dropped for a little bit and then came right back up, and then nothing else happened because we're in the post-earnings hangover, as well as a lot of the bigger stocks are just holding there as we are coming into earnings. So this is what's going to make tomorrow so exciting. So I'm gonna go over everything tomorrow. We're gonna talk about the Fed a little bit, the outcomes, what could potentially happen. We're gonna go over the plays we made today. I did make a bunch of the TLT plays. I'm kind of feeling a little crazy here. I might throw on a bunch more of the plays at TLT, or I might take a bigger trade on the Apple earnings. So I'm gonna go over those with you guys, show you what's on my mind, and even as an update too, you're gonna see the TLT plays I made, you know, comparing them from yesterday, watching these watch lists as we're going through. These should give you ideas. You know, it's honestly giving me myself ideas because I'm writing down what I'm looking at. I'm showing the prices for them. And then come when the market opens, and depending on how it trades throughout the day, I'm able to either say, hey, that was a good play. You know, it's meeting up with my plan and what I talked about. I'm going to buy it here, or I find better opportunities. So I did get some of those plays that we got yesterday or that we mentioned. And then I also got other plays that I saw during the market that were pretty decent. So we got all that. We got everything ready to go. We'll talk about that. But before we get into any of that, you guys know what you need to do. Drop your thumbs up on the video. Make sure you are subscribed, and make sure you see us in the morning and you're there, and that you're even there during the Fed, because we are live Monday through Friday, 30 minutes before open. So we'll see you there. First link in the description. It's pinned in the comments, but you can't forget the most important thing, and that is to post your watch list below. So let us know what you're looking at. Let me know if you're getting the TLTs. Let's see, put some of these prices out there. Let's source that information. We got a lot of people here on the watch list, on the live. There's going to be a lot of eyes and investors on this tomorrow. So people were even asking for a poll. Post some of that stuff down there below. Let's see what you're working with. But let us not delay, and let us get right into it. So the keys for tomorrow: the Fed is going to be at 2 p.m. Eastern. That is going to be the main event. I don't know if it's going to be the dinner or the appetizer, because shortly after you are going to get big earnings. So how the market moves both coming into the earnings and then after is going to be dependent upon the Fed as well as the individual reports. And this is going to probably be the most interesting thing about all of this. And it even lends me to believe that we're going to have a longer extension to see how this digests and play out, because I think it's going to be something that will take even a few days as this push and pull. We have to really see where the wind blows and how the tide pulls. But these are the main things to watch. And even coming into it, though, even though a big move could happen before or after, really what I'm looking for, I think the Fed is going to have more of an impact during the day. So if the market is going up off the bat, and, you know, again, there is going to be companies that report tomorrow, but for the most part, if the market doesn't cuck like a Fed meeting, because that's usually what happens. Honestly, tomorrow, if a normal Fed meeting would really look like this, and then the event would kick it off at 2. But I would expect stocks and even Apple and individual names, you know, we saw it even today. Apple dropped pretty big. This today, what happened today is what tomorrow could look like. But if we start to see the names kind of do their own thing and the overall indexes don't move too much, I'm going to say that's an influence of the Fed. We'll see the reaction, but then I wouldn't be surprised to see a big move out of some of these big names, and then how that could even have some influence on the overall averages. But keep your eye out for that. And here's the key to tomorrow in the Fed and what to be looking for, and this is what leads to the play. You know, some people even ask, you know, TLT, what's the point of it? TLT is a inverse of the bond. So I'll try to give a quick summary, but simply how this works, how bond rates work, how it works with everything here with the Fed. TLT is an inverse of the bond. So TLT goes down when bond rates go up. If bond rates go down, TLT comes down. So now, why would we trade this, and why are we trading this off of the Fed? Because here's what's going to happen. If anything is negative, or if people think the dollar is going to get stronger, but essentially even as protection into this, because again, even bonds benefit a strong dollar, so on and so forth. There's a bunch of reasons, but if people start to get nervous and take their money out of stocks, put it into bonds, the dollar goes up, bond rates come down. As more people go into bonds, the price of the bond goes up and the overall yield goes down. So bond yields go down. And even if you think about it now coming into the Fed, if the Fed cuts rates, depending on the effect that it has on the market, because then the market could worry and it could even shoot the dollar up despite cutting rates. But if they're lowering rates, that would cause rates to get lowered, and that would cause TLT to go up. I'm kind of mixing in a few things in here if you've been paying attention and following along, or already know about this. But then on the reverse there, if the market gets pressure eased and they like the lower rates and it actually leads to more inflation and the dollar weakens, bond yields are going to go up and then TLT would go down. So that's how we're looking at it. But really what my thesis is, it's the same exact thesis as before. And I don't know how I feel about that, because I don't think lightning would strike twice, but then again, it could. We kind of saw that at the last Fed meeting and the follow-up after, and then rates proceedingly started to come down. And this was even, October 4th, if you even look when the rates started to come down, this was right in that time frame of that unscheduled Fed meeting. But rates are now flowing in this bigger range here. But if we're going to see a big move like TLT, it's going to take a big reaction, and this is what I'm even expecting now coming into tomorrow. And there's really two. It's either if it's a real surprise, TLT is going to move like this. If the market's really upset, throws a tantrum, whatever, and we'll go over the outcomes there, the market is not going to like it at all. But on the other hand, if it's something where it's just like the news comes out and the market doesn't like it anyways, or no matter what it is, even if it's good, we might see something like this. And both of these have kind of two different implications. One's the level of how high they went, and then how fast they went, and even the size of the candle. So keep that in mind. But what the important part about tomorrow is that history will be made in some fashion. If we get another cut, that'll be 3/4 of a basis point, and that signals a recession. We have not entered a recessionary period without this occurring, or anytime this has occurred, you have been in a recessionary period. We talked about this yesterday, and then again, the reverse if they go against the market price. Both of these are kind of history, but again, we talked about it a little bit today. And even then, it's kind of if we stick to Powell trying to at least maintain credibility, which I think he will. I think they're going to cut. That's the most possible outcome, and that's what the market is. And that could create the second outcome where it's a slow and steady run up. Or if they don't cut rates and the market gets upset, it'll be something crazy. But either way, why we ended up going with the TLT, why I like the TLT is just for the simple fact that I think that people are going to come into bonds no matter what. Again, if rates get cut, lower rates could have an effect even on the longer end of the curve, which would be affected by TLT. But in general, there's two negative instances on the table. And even if they cut rates, that could bring back fear into the market, and people might get worried or more worried than they initially were, and that could raise bonds. But then the other counter is the Fed has been pumping a bunch of money into the system, so that could really kind of sedate any of the effect here. So that's what we're going to be watching for, and those are the main things. So we talked about it a lot in yesterday's watch list. Come on there. You could watch that or come on stream tomorrow. Again, during the meeting, we'll be watching it and taking notes, so hopefully we see you there. But let us get into the plays. So I have a few potential plays I want to make, but really it's just probably going to be something I played from here. There is even Facebook. We'll get into that, but what I played today, I played a few different sets. I bought this on the Robinhood account, smaller amount. I only spent 20 bucks because I got to wait till some cash clears from there. But this is one of the TLT sicko plays, 143, 143.5, and they were for 4 cents. And now this is what I was saying. Depending on, I saw some of the prices yesterday, and I decided to do some of these spreads because some of these, the goal with the spread, because I bought some out of the money. I bought November 15th. I bought 145.50s for 6 cents. I bought 50 of them straight up, $300. That was one of the plays, but I did start grabbing some of these different spreads here simply because you could get either more time like we did in December, or here in the case of the Novembers, you could get closer to the money, and even though you're capping the gain, if you could get it at a lower cost basis, it might be easier to hit that number and still get 1,000%. In this case, even if these go up and you hit the max gain, you're still going to make 1,000% on your money. So that's not too bad especially if you want to try to get something closer to the money, lower the risk, and get a better shot at it. That could be beneficial for you. On the contrary, you'll get more upside here, but how much more upside do you want? But then you're going to end up spending a lot more. So even in this case now, and this is why I went with the Decembers, because I like these. I like the fact that the 151s, these are just outside of 3 standard deviations. And so were these, and these ones fell just now within 2 standard deviations, so it's interesting. But I want more plays, and this is really, I'm either going to get more of these tomorrow or try to find an even better play. And then that's where, if you even come to the Decembers, we got those at, it was about like 2 cents each. Now they're at 3 cents on the spread, but if you're going to spend 3 cents on the spread, you could even get the 150, 151. So keep that in mind when you're looking at some of these spreads, especially how they move like this. You might be able to get a better fill at a closer price if they change around. That's the only dilemma as TLT moves around, and these are very illiquid. It's been very, very hard to get filled on. Keep that in mind, but these are the 3 I played. I might get more of these 143s. The decision is, do I get more of the 143s? And if I could get something maybe even 6 cents on a debit spread rate way closer to the money, I'll take that. Or if I could get more of these for cheaper. These already went to 7 cents at the ask, so that's pretty beneficial. Then I got these UVXYs during this drop here, and I think I could play UVXY if there is a surprise on the market, but I honestly think that the bonds might be a better play. The only way you really lose on the bonds is if it's a slow run up, but you guys saw last time it was a hard play to hit, but it still eventually went up a lot. It just took some time. So I'm going to keep my eyes on those. And then we did the AMD Iron Condor, $35 call, $35.50 call, and the $33.32.50. And these are 39 cents credit. I did like 15 of them. So it was like $500 gain for like $130 max risk, but unfortunately it fell a little bit below here. And my logic was that some of the chip companies have already done so good that AMD probably would have had a good earnings, but we'll see. They missed. They guided lower, but I think they beat. But we'll see in the morning. I need this above 33, so it's not too bad. We'll probably be up on that, and we got a pretty decent amount of credit, but keep your eyes on those. Those are the other 2 play, but I'm going to be adding either one of these. I'm going to try to find a 2-cent TLT play and get another one closer to the money. But then the other play I'm going to be making, so as far as potential plays for tomorrow, there's that. But then I have this lovely Apple position. I sold this last year or the beginning of this year. We're down on it, $11,000. So found a decent opportunity, and it's kind of risky. But again, I'm showing you guys this for the strategy, and maybe I'll let you guys vote. I kind of have my plan in mind already, but I want to see what you guys would pick. Or even then, just for you guys to observe the strategy and kind of how I'm looking to make a better decision and get a better risk reward to play the opportunity, the earnings, and all that. But you see I'm down on that play. There's the June. What I could do, because this has a margin on it and it has a certain effect, what I really plan to do here, I could sell 3 of these 270 and I could make 10,300 if the stock stays up then higher than 235. But this contract has a lot of time, so realistically I'll probably make an extra 3 grand, and then if it drops to 235 I'll still be down on this, but then I'd make more money on this and I'd make some of that loss back. Or if it goes below 235 I'll start to lose on this, but then I'll make money on the 215. And it says the max risk would be $70,000. That is if the stock goes to 0. But even then, to hedge that, I could do this on a calendar spread. I could make that play and take advantage of the high premium and kind of the earnings, and this would even protect me from losing money on this play. And then if I'm worried about the downside, I would come here to like the November 8th, or I could even do the November 1st. But remember, the key is 235. That's where I'd start to lose money. I think it was the 260 I'd want to actually get this, to get the better price here. Yeah, 231. Yeah, so I'd get 8,000 instead, but it's the same going for about 30-40% of that. But then I would get the 232s. I'd buy 3 of these puts again on a different date, but they would cover it so that in the event it did drop below that for earnings, I could actually be $2 in the money on these, and then that would protect my downside. So get rid of that 260, and you'll see here my max P&L would be that 68,000. So the other one said I would lose 70,000. So it pretty much gives me a max potential loss of $1,000. But then if the stock goes up, I would get a free $10,000 buffer on my other play. And then this would cost me $900 to do so, which is that difference between the max P&L. So that's what I'm thinking of doing. Those are going to be my plays tomorrow. I might go heavy on the TLTs, but I really want to see how it moves tomorrow, and then even the rest of the earnings plays to see what we could do, because then there is also a Facebook play. I have those 230, 235 calls. That's the only other play I'm holding on those, but I like either the 160 puts. I might keep those or try to get, again, a debit spread closer to the money. Maybe even something around the 212 if Facebook does go up. And really, it's just what I've been expecting this whole earnings season. Been lower expectations, but bigger moves. And even as you overlay everything, you could see the SPY has been leading. The SPY's at all-time high. Banks are doing good. Most of these companies and the bigger S&P companies, they all follow each other. So you could see how Apple kind of made its run up and caught up with the SPY. You know, Amazon dropped, but I wouldn't be surprised if Apple and things start getting better, it's going to do the same thing, or the market's going to meet up with Amazon. Google's met up with the SPY. So that's why even with Facebook, I think it'll be make it or break it, and it could make a big move. Or even with what we saw with the AMD, the Netflix, everything else, there's a lot of different opportunities, but some of these condors have been pretty fire, and I think they might be because it is still just a confusing time, and there's such there's so many events and things going on at one time, it's having that big effect. So watch out for those. Watch out for AMD. I'm going to watch that in the morning. I'm going to watch Apple. We're going to set up that play. I'm going to look at the Facebook to set something pretty much with wider ranges. I will look at the condors if I could find one that pays good credit. TLT is what I'm going to be looking for. We got the UVXY, but I'm not too fond of those. And then I'm still in BA. I'm up $600 on that run. Remember, I rolled over that $1,900 one from last week. I took a $250 realized loss. Now we're up $600 on it. So I need Boeing above 350 and below 360 by the end of the week. So depending, I might take profit on it tomorrow if it does make a move above 350, but we will see. Then Starbucks has earnings, and the expectations and pricing on these literally shot up overnight or the last 2 days. So it was a lot lower here, and then out of nowhere, it just kind of started really ramping up. So that's going to be an interesting one. I've usually liked Starbucks. I'm kind of hesitant. I want to see what sort of play we're on there. I'm still undecided, but I think it has potential. And then watch AMD, and even with AMD now, watch NVIDIA. Again, how they operate, you see that they're coming down after hours. I still like their earnings. Their earnings still is a little bit more time from here, but they're going to be good. And even beyond NVIDIA, watch Intel. And remember, that already had its post-earnings. Watch that. You can see beyond. And again, this is what I was saying. It chopped 21%. They're clobbered, but now start to watch how this lockup starts to get affected. Let's see it on a day-by-day. This stock is going to be one to watch. I'm telling you, it is going to go all over the place. So let's see what happens. Then Fitbit, baby. Our long-term portfolio, I don't know if you guys saw it. It's up a decent amount. Remember, I gave myself the advance, but I'm almost even up 10% on all that. But Fitbit is our leader with $26 open of profit on here, which is big for this account. I'm very proud of it. Either way, every other stock we got is literally performing since the month. So good monthly performance. But even then, I was even thinking about cutting half of this because like I'm making so much money. The balance is just so out of whack having 300 bucks in there. But I still kind of like the Google news and the fact that it's still going up. We talked about it a little bit. If you guys want me to make a video on this because we've talked about it so much, I'm just interested in the fact of why I think it'll get here, why I think it'll do this and that. But even then, kind of even the counter examples, I think it's good to look at and it's interesting. But I'm contemplating what I want to do with this in terms of if I keep the $300 in there, and I'm still holding those other shares. But that's where I hope you guys realize I'm trying to just balance out this portfolio. I'm trying to do this thing right. This is the long-term one. I want to keep it safe and steady. I'm not trying to do anything crazy. Again, I don't want to do the most. I don't want to do too much. It's just I want to just put the money in there and watch it grow and have fun just looking at it. So that's going to be the difficult part to decide. But watch Fitbit, though. If it keeps going this and if it has another good green day tomorrow, that'll be amazing. But watch there. Watch Home Depot. They started to drop more, and now some of those puts are starting to come to life. The put spreads at least, so we'll see what happens. And if that picks up, watch for McDonald's because McDonald's bounced, Home Depot sold off. So watch for more rotational elements. And then again, NVIDIA, and then Shopify had earnings. And they dropped, they were down a lot more and they bounced back up. And this is kind of a normal day. And that's what's kind of making me even say some of these condors would have been great. And you could see there, but watch Shopify and how it's probably going to meet up with the market at some place or another, depending on the move we make from the Fed. But keep your eye out for that. We saw Roku move big, and you guys just know what Shopify could do. And then watch lastly, Google here. It didn't do the bounce from earnings like we expected with Amazon, but I think as this thing kind of calms down a little bit more, keep your eye out for it. I think tomorrow might be that big day for it. So I was watching those this morning. I wanted to scoop some. I didn't, but keep an eye out for it. I think it might be ready, but again, we might have to wait on the Fed on that. There's that. And then lastly, we already talked about Starbucks. And then I want to watch Micron. And again, just to give another emphasis to see how AMD, we've had the other chip makers, Intel and all those report, and I think those are going to have a good effect. And then IWM, I said I was going to find a big play. I know some people were getting kind of antsy and saying a big move, this or that's going to happen. And if we are going to look for that, I want to see what's available because, again, because a lot of those plays like the TLT and the UVXY, like I didn't like the UVXY. I like the TLT. I kind of want more of the opportunity with earnings. So I want to see if we could stretch our dollar more and get better put protection. Remember, I made videos on there. You could, instead of trying to play next week out on this and getting certain plays, you could get, if you're really trying to play a big shock OMG, you know, there's better insurance plays that could protect, you know, you'll need a big 10, 15% move on the overall indices, but we're talking $500 into $50,000, stuff along those lines. So that's what I'm more interested in when it comes to these crazy plays. So someone remind me about those. We'll look at them tomorrow, but That is your watch list, ladies and gentlemen. Make sure you post your watch list. Make sure you're hydrated, healthy, ready to go. Make sure I see you in the morning. Make sure you're grateful, happy, excited. And even if you're not, that's okay. Just get your head in the game. Stay focused. Just relax. Stop shrugging your shoulders. Relax that jaw. Do your push-ups. You know what to do. And get ready for history tomorrow. Please keep it positive and respectful in the chat. That's all we ask. And let's go.